This is The Art of Startup War, and I am your host, Brian McMahon. I am the sensei here at Expert Dojo, the fastest growing startup accelerator in Southern California. Now, in the first 2 seasons, we answered your questions about how to find investment for your business. We brought in the most accomplished investors in startup in America. You can find it on iTunes, SoundCloud, and Google Play. Now, here in season 3, we're flipping the script. We're going to hear real stories from entrepreneurs who are in the trenches today. In these episodes, we're going to take our guests through the storytelling model called the entrepreneur's journey. We'll hear about what sparked their call to entrepreneurship, help they received along the way, forces they overcame, dark times and revelations. So join us every Tuesday, 10 a.m. Pacific Standard Time. Start the week a smarter entrepreneur. Good morning, it is 10 o'clock. I am back again with another phenomenal entrepreneur who has built an incredible business. I bring to you Sam from Axel. Welcome.
Hi, good to be here.
What the hell do I say to that?
Yeah, no, it's for the morning. I think I'm pretty alert.
It's going to be good. And we're going to talk for the next 45 minutes about, in many cases in this podcast, it's always focused on investment. In many cases, we're talking about how do we build a great business? The wonderful thing about you is you've already built a great business. So much of this will be about the journey that you went through to get Axel to the point that it's at, and then what's going to come next.
Awesome. Well, looking forward to it.
Okay, well, let's kick it off. Let's start. Let's go back to the beginning, right? Take us from the first business, because now you've got Axel. It's your baby. You have it up to like almost $1 million a year. You're doing phenomenal in the business. But take us back just before Axel. When did you first want to be an entrepreneur?
Oh goodness, that takes me way back. I was actually I've had a couple of whacks at it at this point. The main experience that I've had in this was in doing a system integration company in Silicon Valley in the 1990s and early 2000s called Torque Systems. And we basically built network systems for folks who worked with images and publishing workflows.
And you started that yourself, did you?
Started that myself, yeah.
Wow, okay,
yep.
Great.
And then from
did it fall upon you, this great fortune, or did you think, you know what? This is an awesome idea which nobody else has seen.
Well, we kind of stumbled into that one starting from a background in high-performance computing. So I had some experience with building high-performance systems, both the software side and a little bit on the hardware side. And then we basically found an application that really needed that horsepower in image processing. So we had a really good run. We built the company to pretty decent size. We ended up getting whacked a little bit by the 9/11 recession in the advertising business. A lot of our customers were ad agencies, yeah, for sure. But it was a great experience. And I would say, I really enjoyed building a company in that case. And then from there, I ended up going to Avid, where I ended up being more of an entrepreneur inside a larger company. And there was responsible for a product line, yeah, rather than like every last thing about the company. Yeah. So I was there for 5 years, from 2007 to 2012, and that was actually as much fun as being an entrepreneur in many ways. Particularly because you didn't have to worry about a lot of the gory details because that was handled by the corporate mothership.
No, and by the way, I like this. We don't talk enough about entrepreneurship here. I mean, as an entrepreneur, you're really all in.
Yeah.
You don't meet payroll, you're screwed. You don't pay your mortgage, you're screwed. Anything goes wrong, like it's all over. But with entrepreneurship, you have your job, you have your money, you have everything coming through. You're nicely covered. You can build whatever you want to build.
Yeah, it's actually kind of all the fun of being an entrepreneur without all the responsibility. Worst thing that could happen in that circumstances, okay, the company might, your umbrella might disappear from over you. But in that case, Avid was and is actually a very sort of stable, not a particularly high growth company, but they were very well established in the markets, in the broadcast market particularly.
Beautiful.
And
but you hit 5 years, and then you thought, all right.
Well, it was actually even more interesting than that. We built a business there. I was brought in right after the 1.0 release of a product called Interplay, which is now called Media Central. And we essentially had to do a turnaround because the first introduction was kind of a mess. There were a lot of customers that were expecting more than what they got, and I think as a consultant initially, and then as an employee there, I was able to convince them to turn around that business and to really double down on it. So we had a tremendous team of engineers. We built the product from about a $17 million run rate to a $55 million run rate when I left.
Wow.
And it really did feel like entrepreneurship. Like, nobody ever second guessed you because we were one of the two highest growing product lines in the company. Beautiful. And the company had like dozens of product lines. So that was great as far as it went. But then the limitations were that Avid, while it's very strong in traditional broadcast, does not really have a footprint in some of the emerging uses of video. And so my last couple of years there, it became really clear that there was a huge amount of growth happening in applications like lecture footage for universities, or churches wanting to put their sermons online and streaming, or sports venues, or corporate video. And so these markets, which traditionally were kind of an afterthought compared to broadcasting, were exploding, and broadcasting, by contrast, is kind of flat.
Yeah.
So the idea with
Axel, all these people with all these videos, and I mean, how do you even store them other than having like 420 hard drives stuck around your house?
Exactly.
Like, AKA me.
Yeah, so you're probably like a smaller version of what our typical customer is like. If you have 420 hard drives, actually, you might even be
I know, seriously, I must have. If I go through the 40 countries that I've been in, I probably have 100 with no exaggeration. I have a hard drive in Spain. I have a hard drive. Like, it's just how it works, right? Because you reach for the thing that's closest to you. You stick it in. You try and store as much as you possibly can. You hope it's not the whole 2 hours of video of your brother's wedding.
Yep.
And then you rinse and repeat.
Exactly.
Which is kind of a terrible, terrible, terrible method that hadn't really changed in 15 years.
Well, I would argue it even goes back to, before hard drives, when people just stored these on VTRs and stuff. I mean, you in a consumer level, you might have had a VHS or Betamax, but in the professional world, they had their own standards for this.
You just said the word Betamax. Right?
I did.
On a podcast.
I understand.
Okay, for all you listeners out there, and there are many
of
you.
There was this thing called Betamax back when dinosaurs roamed the earth. But Sony actually took that technology and has kept on with it. They were a total flop in the consumer space, but they actually kept going with it, the whole helical scan recording stuff, and applied it very successfully in the professional space. Yeah. So anyway, you can go back to people having decks, professional decks for this stuff. All that's happened with hard drives is that it's gone from being on a cassette, which wasn't random access, to being on a hard drive, which is random access. But the basic approach has been consistent the whole time, which is, you have a shelf full of stuff. You stack the stuff on the shelf. Maybe you put little Post-it notes.
If you remember, you put a Post-it note. Or if you're really good, you have an indelible marker and you write down, Brian's stuff, don't touch.
Exactly.
1982. And then you think, what the frick was I doing in 1982?
Exactly. And then if you want to watch it, you got to plug it into a computer and look at it. So it turns out that all these emerging markets are exactly as you describe, except more and larger amounts of stuff, higher quality stuff, sometimes rooms full of material. But they're still kind of doing sneaker net. They're plugging things in, they're seeing what's on them. I've had visits with some of our biggest customers, and they would tell me their war stories of trying to find stuff in that environment. So anyway, when I left Avid, it was just really clear that this was a huge opportunity waiting to happen. There are literally hundreds of thousands of these video production teams worldwide. Our estimate is about 250,000 right now.
Wow.
And that's likely to grow to about 500,000 over the next 5 years. So it's a huge untapped market, and the solutions are things like Post-it notes and Google Docs, or hoping you have it all in your head and then finding out that you're wrong. That's our competition.
Yeah. And then so tell me the idea exactly. I mean, obviously it's around storage. Obviously it's around companies that have huge amounts of data that don't know how to put them into a concise and easy and simple way so they get easy access. But tell me exactly what you came up with, which was so special at that time, and then how you managed to convince companies to go for your particular service.
Sure. So as we thought about the problem, it's really two steps that often need to happen very close behind one another. One of them is to consolidate all of those loose hard drives onto some kind of shared storage. And when we started Axel back in 2012, most of the bigger studios and big broadcasters were already doing this. They would have a SAN, a storage area network, or a network storage device called a NAS. And they would typically bring all their stuff onto that. But the average corporate or sports venue or church video customer did not do that. And so essentially, the first step is just bringing best practices to those folks like, hey, shared storage getting affordable, you should buy some, and you should bring all your loose hard drives and copy them onto that. That has the added advantage that you then have a second copy of everything, right? Because those loose hard drives can and do fail.
Always.
So, okay, very good. You've managed to consolidate it. Now what? Now the problem is searching it. And Post-it notes don't work as well when you have a big folder structure with hundreds or thousands of folders with hundreds of thousands of files. So that's where our software comes in. Essentially, it scans the whole folder structure of your storage and gives you a kind of live report of everything that's on that storage, including making low-res versions of stuff so that you can stream them into a browser interface, into your mobile device, so that you can tag them and search them. And very often, the next step is that they need to be repurposed for social media. Because the other big trend, of course, of the last few years is that video content is integral to all the social media that people are doing. In a corporate space, it's about not only internal education, but also external marketing. Mm-hmm. You know, some of our corporate customers like PricewaterhouseCoopers or REI, they use video for a real mix of internal and external messaging. But a lot of it goes out via social media, which means you have to slice and dice it into 5 or 10 second chunks. And again, that puts even more emphasis on findability. It's like, I know we have footage of the guy hiking into the sunset with the big tree on it. Good luck just sorting through a bunch of loose hard drives to find that clip.
This is brilliant. Everybody, by the way, I don't care who's listening to this podcast now, if it's like somebody at home who does YouTube videos of some basic stuff, or if it's large corporations, there's not a single person who's not thinking to themselves how useful that would be to them right now. The hard thing, though, is when you launch it, right? Because you knew this, you saw it, you realized where it was going. Video, I mean, we could never have guessed that video would become so insanely popular and just overthrow everything else, but we knew it was always going to be really big.
Yep.
So when you went down that road at the beginning, what was it that helped you? Like setting up the business. Now, you'd had the previous business, which meant that you kind of knew what you were doing, right?
Hopefully, yes.
What did you do differently to make sure that you structured yourself for success? And talk to me about the investment side of it. If you took investment or you needed it, or how you actually managed to not starve.
Yep. So I was actually able to bootstrap the company in the early years. I had some money set aside. Actually had made some reasonably smart equity investments. I had some Apple stock from the early 90s.
Get out of here.
So I sold a big part of funding Axel. I sort of bit the bullet and sold that Apple stock for more than I should have made, and basically folded that into starting the company. And so we were able to launch it pretty much freestanding. Now the goal was to kind of get something off the ground. One of my co-founders, Patrice, had actually worked with me in a former life. And so when he came on board, we had a really world-class technologist who could look at the technical side of things. He's not so much a coder as a product manager. And then we had some really good coders to complement what Patrice does. So we ended up building this small team just to get things off the ground. And but even so, it was very precarious for the first 6 months. And I remember when we did our first trade show, I told Patrice and the one other guy that was coming with me, who was helping us on the marketing side, I said, let's just print up some resumes. So that when we go to the show, if after the first day or so, we're not getting a response and we missed the mark here, at least we'll have some resumes and we can walk around to the neighboring booths and start announcing our availability. I figured we'd be hedged, right? Like, why go all in when you can hedge?
Really?
So
I love that.
We didn't know, we didn't know how people would respond. And historically, this kind of software has only been like enterprise software, $500,000, at least $100,000. And we were coming out and saying we were going to do an appliance, very low cost, starting at around $1,000, $2,000. And because we could, and the technology was becoming available. But we didn't know how people react.
And of course, your competitors all have the innovator's dilemma, which is you're selling a product for $50,000. Like, woe betide the executive in that company that walks in and says, "Guys, I've got an idea. We should do this for $2,000."
Well, as it turns out, I was that executive. No, I proposed it at Avid a couple of times actually, and they made a very good case that hey, we were firing on all cylinders with our enterprise software. Don't take your eye off the ball. It was exactly like Clayton.
It's a very good case. It's like, we're making $50,000.
Well, yeah, why do you want... Exactly. Well, furthermore, at Avid, there's another thing, which is...
It's like a Jerry Maguire moment, isn't it, really?
It totally is.
You have your manifesto. The world deserves better.
Right,
this is important. Companies need it.
But there's an additional issue, which is still true of Avid, which is they do a lot of sell-through of their own storage.
Yeah.
So they loved to have the entire stack.
Yeah.
And what I was proposing was that we unbundle the stack and sell the most valuable piece of it for a few $1,000s. And they were like, no, this is not a good idea. We would sacrifice tons of revenue, not only in your product, but in the adjoining storage products. So
that's what I love about this. There's never any goodies and baddies in startup for me. There's just innovators and opportunity.
Totally agree.
That's all.
Yep.
You just see it. It's a big gaping hole. And you think, am I mad? Am I mad thinking it can't be that simple that we build strong software, which of course it has to be great software to compete with enterprise, right? So that's a given. But we build this great software and then we can sell it for 10, 15, 40 times less than what people would pay elsewhere. Yeah, so I got you. Like you're going there thinking we must be wrong,
right?
Because it can't be this good.
Oh, and actually, I had my ex-boss, one guy, come by our booth, not the first year, but the second year, and basically say to us like, "Haven't you heard? There is no such thing as what you're doing." Like proven wrong. Like we're done here. I'm like, yeah, well, that's the point. We're doing it so that there will be such a thing.
Yeah.
But it was.
And what happened at the show?
Well, the great thing is that very first year we won a Best of Show award. Wow. So not only did we not have to whip out our resumes, but we came off the show with a ton of interest, even some early orders, and a huge amount of positive encouragement from even big name customers. There were people going, "Wow, I could use this on my field productions. I could use this for my branch offices." So it got us thinking that we were onto something.
So talk to me a little bit about the growth of the company from then, and include in there, if you can, maybe some really pivotal times that helped you grow the company, or maybe things that you did or people that you knew, and then also detractors. Like, we don't need to talk about them by name, but those niggling just...
Well, like my ex-boss, for instance.
Yeah.
There is no such thing. What are you even doing here,
Yeah. No, I find that's a moment of screw you. You know what? I was kind of semi-motivated before,
right?
But you've actually really helped me out here, so totally. I want to thank you. Exactly. And then all I want to do is I just want to round that whole thing up with just being able to offer him a job in like 12 months' time.
Yeah, no,
yeah,
I would hold my breath for that.
That's just Irish. We're very financial. Okay, so so tell us, bring me through the journey a little bit.
Absolutely.
About some of especially the early times, the growth of the company and what happened.
Certainly. So our early concept was we could deploy this. At that time, Apple had Mac Minis that were actually pretty powerful. And we thought, what could be better? A little bitty box, about 7 inches square. We'll just load this affordable software on this affordable box, and it'll be a kind of appliance. And that was really good. And I think it helped people really understand the vision. And so for the first couple of years, we just kind of iterated on that, more better Mac Minis, better software. And the software was originally designed for really small uses. Like we were thinking about wedding videographers. We were thinking about maybe high school sports teams, folks that would kind of like they have a pile of hard drives, but nothing too serious. It turned out that the most interested customers and the ones who spent the most were bigger than that. Right. And so our original goal was to handle maybe up to 30,000 or so assets per system. That turned out to be nowhere close to what people needed. They needed hundreds of thousands. Wow. And then they needed millions. And here we were with our little teeny rowboat, out in the open seas. So we said, okay, we got to upgrade the rowboat. And so a couple of years in addition to just routine code upgrades, we re-architected the product in about 2015, just a major overhaul, and broke it up into a bunch of services, a lot of sort of state-of-the-art web techniques. So right now, the product uses very advanced.
Before we get to today, and what I really like about where you're coming from with this is, number one, you started it by bootstrapping it and market validating immediately within 6 months of being there, without even having the product fully done.
Yep.
You're in a trade show. You're in front of your future customers. You have your product, and I want everybody listening to the podcast as this is the only way to put your business out there. It's so powerful because it gives you something that most entrepreneurs are terrified at the start, which is the truth.
Right.
And in your case, the truth was awesome because it showed everybody that you had this great product and you were right in this analysis you've done before. But in other cases, it won't quite be the same. So I just want to say to everybody listening to that. Secondly, you reiterate it all the way through that market validation. Always go back to your customer. Always see what they want. Always see where they're going to go to build up the product to a great place is, again, A+++++. Before we get to kind of where the product has got to today, tell me about some of the moments, like the challenging moments, especially when you're building this product up. And you're to all intents and purposes outside a multinational company selling a product which everybody needs. You're now dealing one-on-one with some of the biggest companies in the world, But you just a small company, right, with you and a couple of people around you.
Sure.
Where you're just trying to make payroll at the end of the month.
Absolutely. Yeah. So we definitely had those moments, especially in what I would describe as the lean years where, for instance, when we were re-architecting it, that took a huge amount of engineering and work, and we were understaffed to do that. So the customers knew what they wanted, and it was, kind of set the bar up here, and we were crawling our way up, doing the best we could. But we definitely had people that were able to, I would say, overwhelm the product in those years. And on the one hand, it was very flattering that they even tried, but we knew that we had to come back with kind of version 2.0. And from a business standpoint,
and there must have been a few sleepless nights, especially as you've got that. Because now they're your customers, they're your friends, they're the people who are around you. You want to do right by them, but you're building up to the expectations.
Absolutely. And in that sense, though, it was also helpful that the product didn't cost too much. Because when I'd been at Avid, when you're selling stuff for hundreds of thousands of dollars, people expect to be able to call you at 2 a.m. and say, hey, it crashed or this function doesn't work. If they spend $5,000 or $10,000, the bar is considerably lower, and that helped us because I think people cut us some slack, and we're like, okay, we're re-engineering it. But
you're also very like from my dealings with you, we've known each other for a long time now. And my dealings, you're very upfront with what's happened and very genuine with the situation of the business. And I also think that helps. That for me is just, again, for people listening, as you're building, and we're all building, by the way, now whether it's at Expert Dojo or Sam or anyone else, it's what we do. And it means that we're always reaching beyond what we're actually capable of doing today so that we can provide a better tomorrow for everybody else. Be really honest with your customers about this. Like, say to them, we're building it, we're making it better. Bear with us, work with us, tell us what's really important today and we'll fix it. And that way you keep customers long term.
Exactly. No, I couldn't agree more. In fact, one of the most challenging customers we had back then was iHeartMedia.
Really?
The radio, because they go out and they shoot all of the performances at when they do the iHeartMedia concerts live.
Huge.
Massive. Yep. And they have teams that go out, shoot all this stuff, and bring back tens or hundreds of terabytes of material. They totally overwhelmed our stuff.
Wow.
And so we did everything we could. We helped them build the biggest possible cluster to run our software on. Eventually, we just barely kind of got it together.
It's moving beyond bar mitzvahs, right?
He's way beyond, way beyond, exactly. And,
iHeartMedia, for those of you in America, obviously you know who iHeartMedia are. Outside America, you just can't even imagine the behemoth that we're talking about. They own everything. And we're talking millions and millions and millions of just data.
Yeah. No, I mean, it's unbelievable. And because of the shift to live, most of the revenues nowadays come from live touring, so that their regional festivals and things have become a big breadwinner, not only for them, but for the artists as well. So they've really gotten into the live event business. Anyway, the fun thing was that the guy who pioneered that there as our customer ended up earlier this year joining our company, and so now he's the guy who provides the technical support to the iHeartMedia team from within Axle AI, and just having that experience of kind of getting through the wars when the product was a lot earlier and a lot skimpier, and then getting the validation that at the end of all that he believed in us enough to join the company was pretty cool.
And by the way, for everybody listening, my favorite podcast about investment with a company that's growing is when investment isn't mentioned. At the start, we all need investment as a company grows. We all need cash flow. We all need to get bigger and bigger and bigger. But you notice, as Sam is talking through here, everything was about using cash flow to drive growth, then using growth to drive innovation. Then the innovation gets bigger customers. Then the bigger customers drive more cash flow. It is the perfect way to get a startup. Now, it's not always possible for everyone, but I think it's possible for a hell of a lot more companies than we actually think it's for. And now you're years and years into it. We're now in
6 years.
6 years, and you've got the revenues up to phenomenal levels.
Yeah.
What's next?
Well, the big thing that's next is...
Because funding has to be on the horizon at some stage soon.
And in fact, earlier this year, we made a decision to start seeking funding, and we actually got not only the dojo on board, but also Quake Capital. We're part
Great organization.
Yeah, super.
Phenomenal accelerator. And again, for those of you who don't know Quake Capital, one of the premier accelerators here in Southern California and also in New York. So just to get into Quake Capital's program is huge.
Yeah, no, and that, so we've gotten some external money in this year, and we've been able to do a lot with it because we were already essentially at break even. So, last year we were actually a little bit cash flow positive, and we've been able to parlay that with some outside capital into a lot of growth opportunities. So the thing we see now is two big trends that are going to shape our business for the next 3 to 4 years. One of them is the increasing power of AI algorithms. When we started, almost all of the tagging and subclipping that people did in our software was manual. And now AI has gotten good enough that you can do face recognition, you can do object recognition, you can even do speech transcription, so that you get a huge amount of metadata, of descriptive information, without having to spend time on it. And that's a giant win, and it makes our product way more useful to our customers, in addition to making it kind of more attractive as a business, because there's all these cool new capabilities we can sell. And the second big trend is the possibility of embedding this stuff. So when we first started out, we would need to run on a Mac Mini box. Turns out Apple came out with some really fantastic new Mac Minis about a month ago that sort of upped the ante in terms of performance. And so we're doing a lot of bundled packages with those. But it's now even possible to think about taking this capability and embedding it into storage devices, into cloud applications, so that wherever your media is, we can catalog it without a large hardware investment. And that not only leads to much broader market possibilities, but it also means that we can partner up with companies who, for instance, make the storage, but want to add kind of sex appeal and capabilities to that storage.
Phenomenal. And I think one of the reasons why at Expert Dojo we were so desperate to be an equity partner of yours is because, look, I'm not the smartest guy in the world nor the dumbest guy in the world, but I know two things. I know video not only is not going away, but video is going to keep on exploding exponentially. Hashtag Instagram, thank you for being out there. It is getting more and more and more. Number two, the problem of curation is becoming worse and worse every day. I don't even know what I have. It's gone. Like, it's over. I don't know who my LinkedIn contacts are. I don't know who my Facebook friends are. I don't know how many Twitter people. It's over. So anything, any software that you have that actually allows for simple curation within the fastest growing area in the world today, which is video, for me was a no-brainer to get involved with you at the beginning. And I think just the excitement of seeing where it is absolutely phenomenal. What kind of companies are the right companies for you in this next phase? Is it the large corporations, the huge ones, or is it the smaller business enterprises?
Well, what we find is that actually, regardless of the size of the parent company, the teams tend to be fairly similar in makeup. So, for instance, when we go to a large corporate, we just did an installation at Patagonia, for instance, the sportswear company.
Yeah, awesome.
And their video team is 6 or 7 people. It's $1 billion company, but the video team is 6 or 7 people. And we have other customers like Madison Square Garden, roughly the same size. Meanwhile, you can go to a small college, and if they're putting out a lot of courseware, they'll have 6 or 7 people. Or an independent film, they've got some freelancers. And so it seems like the sweet spot for team size is between, say, 3 and 30 people.
Yeah.
And we almost don't concern ourselves with what the parent company is, because maybe the whole team, if it's an independent production company, it's everybody in the company. Or in PricewaterhouseCoopers, they have 190,000 employees. And within that, they have this video team. It turns out they have several of them regionally. So it's more about the team than, I would say, the demographics of the parent company.
I love it. So it's everybody, really. So look, for everybody out there who's listening, if like us, you're thinking, yeah, this is kind of a good investment opportunity. I like the sound of this company. Anybody wants to contact you, how can they get you?
Sure. So I can be reached on email. I'm Sam at axle.ai.
Of course, it's .ai.
.ai. Of course. Well, and because of the importance of AI to our business at this point. And then our website is www.axle.ai.
Beautiful. And then just maybe a final piece of advice. Entrepreneurs listening, customers listening, everybody else out there, what would you like to leave them with?
I would say that in today's environment, everybody is emphasizing, unicorns and multi-billion-dollar companies, and that's all great. We see an opportunity to build, like our company, many companies that are in the zone kind of right underneath these huge unicorns. And I think it's actually healthier for the world economy to have it that way.
It's a real company.
It's a real company.
This is okay.
Exactly.
So now you got me going, right? So in a world of Ponzi schemes and pyramid schemes and companies that don't make any money, they don't bring in revenue, they don't make profits, it is so reassuring and so nice for me to see a company that is built on customers, loyalty, revenue, profits, gross profit margins that actually bring you forward. Because you're right, it's not just about your company and what it's based on, it's about the entire bedrock of how this country is built. So congrats for everything that you've built. I look forward to being a friend and a business partner of yours for many, many years to come. And let's just keep pushing it forward.
Great. Thanks so much.
Thanks for joining us. If you love the podcast, please empower your circle by sharing these stories. The Art of Startup War is brought to you by Expert Dojo. And remember, we invest in startups, $50,000 checks. Make sure you apply on our site if you are one of those great entrepreneurs looking to bring your company to the next level. As far as the Art of Startup War is concerned, we are back every single Tuesday at 10 a.m. So remember, check out the new episodes. If you want to find out what the investors think, check out season 1 or 2. But make sure you join us every single week.